Welcome to Monday Morning Metrics. Great way to start the week. My name is Rebecca Berneck. I am the founder and CEO of Office Heads. We are a financial management company located in Evanston, Illinois. We just celebrated our 10-year anniversary, so we're really glad to be here. Glad that you're here for Monday Morning Metric. Today, we're going to talk about cash flow. How do I manage cash flow? This weekend, Friday night, I actually gave a speech at a commencement ceremony for the Goldman Sachs 10,000 Small Businesses program. Their Chicago cohort 21 graduated. I am a happy graduate of cohort 12, and that was back in 2015. So I had the honor of speaking in front of the new graduates. Well, one of the things I suggested is as you're implementing a growth plan, and even if you're just managing your company day to day, month to month without any major changes, cash flow, you don't want to run into cash flow problems. And so today we're going to talk about how to manage cash flow. So the first thing that I would like you to think about is your savings, having adequate savings. You won't have a cash flow issue if you have adequate savings in your account. Money goes in, money goes out, and everything is fine if there's enough money. But when you're operating with not as much cash as you would like to have, that's when we have a potential cash flow issue. So let's talk about adequate savings. I always say that there's 4 things that you get to do with your profit at the end of every quarter. Take a look at your profit and see what you've got left. So see what you're going to do with your profit. One of them is profit distribution. One is pay down debt. The other is put money into your company to help it to grow. But the other one is adequate savings. So as a rule of thumb, take your operating income for a month, divide it in half, and that's what you should have as your minimum bank balance. So let's say you are a service business. It takes you about $20,000 a month to operate. That includes your salaries. That includes everything, $20,000 a month. So that means that you should really, at a minimum, always have 10 grand in the bank. Now, when it comes to maximum savings and having savings goal, take your monthly operating expenses and multiply that times 3. So in our scenario, if it was 20,000, I should strive to have 60,000. That's kind of a nice rule of thumb to have when it comes to your savings. So what's happening if you do not operate with that amount of savings in the bank? Well, you might have to be choosy about which bills that you pay to be able to manage cash flow. So we have a nice 14-day cash flow model that we use. It's an Excel model. And go ahead and hit me in the comments below if you want a copy of this. And basically what you do, and you can do this in your own Excel model or on the back of an envelope. You write down the amount of money that you have in the bank today. Okay, so they're saying, okay, here it is today. I did all of my bookkeeping, right? You want to do this after you've done all your bookkeeping so you know all of the information that you're working with. This is how much money I have in the bank. This is how much money I expect to pay in my payables in the next 14 days. This is how much money I expect to come in the next 14 days. And this is how much money you kind of have to play with. Then you say, well, okay, so I've got half of my operating expenses that need to go out. And then I have my bills to pay. And so maybe you'll have a bill in from an attorney, or you'll have a bill in from something that you purchased that's due in a couple of days. Maybe it's due in 30 days, but you wonder if you can pay it now. That's going to be your 14-day cash flow model. So it's what you have in the bank now, what you expect to get in the next 14 days, what you know is going out in the next 14 days, and how much money do you have left, and how much money is that going to squeak you down to below zero? You don't want to pay your bills if it's going to bring you down below zero, because that's when you have cash flow issues, which we're trying to avoid. Now, keeping in mind too, this also includes payroll. So whether it's every other week that you pay payroll or the 15th and the 30th, make sure that you include your payroll expenses in there, because that's for a lot of service businesses, that's your largest expense. So that's how you manage cash flow. And again, like I mentioned, we have this Excel file. It's pretty easy to use. It's a 14-day cash flow. You plug this stuff in and it gives you a nice visual of where your cash flow is going to be, where your bank balance is going to be. And it's really helpful in how to determine which bills you're going to pay today, tomorrow, next week, or any time between the next time that you do your bookkeeping work session. So there you go. There you have it. Monday Morning Metric. That's how you manage your cash flow. You don't want to go below zero. You don't want to be laying in bed going, oh no, can I cover payroll? Manage your cash flow. Be proactive. It can be easy. It can be easy. Just be proactive. Thank you very much for joining me on Monday Morning Metric. Hope to see you again next week, and have a great and profitable day.